Hey everybody, this is David Skarika. How's everybody doing? I hope everybody is very well. So today, I'm just going to give you a little backlog here because you can see we're finally changed the name to Profit from Pessimism right here on our Zoom here. So next month, my new book is out, and I really want to start promoting this site. I want to make this site big. I want to make it bigger than Addicted to Profits was. So I'll give you a little timeline on my past. So 1998, I started Addicted to Profits. I had a book called Stock Market Panic, which kind of predicted the dot-com bust, stock market bust, and then commodities boom of the next 10 years. And my idea and the reason I started my business instead of going to university at the time, I was 21 years old at the time, was that I figured when I get out of university, which would have been in 2000 because I would have started university in 1996. That by the time that occurred, uh, there would be a big bust starting in the stock market, and within a few years, financial jobs would have been kind of more difficult to hold. Now, there wasn't really a mass layoffs in Canada in the financial sector in 2001, 2002, especially because commodities started to move higher, and obviously Canada is much more dependent on the commodity sector. So I don't know if I would have lost my job, but also I've always wanted to move offshore. Like it's funny. I was just thinking about my high school yearbook where in my thing, they ask you where you see yourself in 20 or 30 years. And I said, I see myself living offshore in a tax haven, tax free. I still remember. So I wish I had my high school yearbook because I could see that and show it to you. But anyhow, so I always kind of knew I wanted to do this. And so then Addicted to Profits, I really had, as the monthly letter, et cetera, for good 15 years. And then I kind of started to wane on me and I started doing more just like reports. So like 2015 or so, I was very bearish on the markets. I did a lot of reports on shorting, hammering, uh, balance sheets and income statements. And I did pretty well in 2015, despite the market going higher. I had one short in particular that soared in price. And then a few years later, when the commodity market started coming out of their lows in 2016, I realized I can make money raising money for companies. Like, you can get the finder's fees, you can get consulting fees, you can get marketing fees. So that's really where I turned. And I kind of just had Addicted to Profits on life support from about 2015, 2016 till about really till I stopped it in 2023, I guess. Right. So, and then I had this idea for stock chart of the day. And then because of my new book, the whole thesis is buying these undervalued investments, using the Templeton form of investing, maximum pessimism, profit from pessimism. So stock chart of the day is still a thing, but it's just part of it, part of this. And by the way, I'm just going to start doing stock charts of the day. So um, at some point, I'll put a link below to my free email list for those of you who aren't on it. So I'm going to do some stock charts of the day that are only based on my on my website because my new book is coming out. I want to drive traffic to this website, and Newsmax is publishing it. And of course they have obviously a huge arm, and a lot of the things I talk about in my book are now precedent. We're seeing uh, we're seeing the stock market decline. We're seeing because of overvaluation. We're seeing gold and precious metal prices increasing. We're seeing this kind of talk about hypernormalization, what I call it. It's like basically a fake economy, and we're seeing that now being exposed. That a lot of the economy was driven by government spending, which was propping up growth, et cetera, et cetera. Or the economy is propped up by capital gains, in these stocks and people using that wealth effect. So nothing really real is being created. So all these things are being done here. So that's kind of like the gist of it. So it'll be very media oriented. I like doing these videos. People tell me I'm a pretty good talker, so I like that a lot. So anyhow, so we're going to keep this a profit from pessimism.com, and we're going to keep doing these videos. So once I really get the website launched and then the Substack launched, we're gonna have almost like daily updates for the readers, maybe even more than one updates. And there'll just be little small blogs or blurbs, maybe a quick podcast that's 2, 3 minutes if I see something to talk about. And then we'll do a few of these weekly updates for you free subscribers. And I would hope that the basic Patreon service will have all of the free updates that are video orientated. Plus, I'm going to start putting all the free updates there shortly. Plus one update a week. Patreon's only $5 a month, and stock chart, or sorry, profit from pessimism. Both the Substack and my website will be $27 a month or $900 for a lifetime subscription. And that's a pretty good deal because that's basically pays for 3 years. And if lifetime means you'll be on for 5, 10, 20 years. I would say the minimum is going to be 10 years. I see myself doing this, continuing to do this. So we're seeing the market bounce a bit here today. What did I wanted to show you? that I think is really interesting is, again, I just think that we're now nearing kind of a bounce in the markets. I know we went below all these moving averages, but we got very oversold. That's today's theme of the stock chart of the day is how oversold we were. You can see that this below 30 in the RSI was the lowest since November of 2024 on the Dow, and that was the low of that correction on the Dow. Now, as we can see on these corrections, this correction was a bit unique because how quickly it was, and and it was just basically straight down. And most of these corrections kind of have these little rallies and this and that. So maybe we'll have a rally and another move lower. I don't know, but I definitely think the sentiment has gotten bad and we got very oversold. So this is the S&P 500, and you can see again, go look at this RSI. Again, you're talking about the lowest since again that October November period of 2023, which was essentially the correction low. Now, I'm not saying we're going to have a correction low, but what I am saying is we're probably good. It's set in line for a rally. So if we go look at the reason I wanted to show you this is look at the bear market of 2022. And you can see these kind of oversold readings were always met by these kind of these rallies. And of course, this final oversold reading was essentially the bottom of the bear market. So I think this is important to take into account. And there's some interesting things going on because right now people's outlook for their 5 or 10 years futures of their finance or inflation or just consumer sentiment in general, it's nearing like all-time lows or at least multi-year lows. And what's interesting is those things are kind of contrary indicators, though. Like, even though I'm not supportive of a lot of the things that are going on tariff-wise, the fact that people are now overreacting and reacting so poorly, maybe there will be sign of a short-term reprieve as in the markets here. And remember, I think now some of the more positive things are going to start happening. They're going to try to pass, deregulation and tax cuts. The problem is Congress moves at a snail's pace, and maybe that was a strategic error or blunder that Trump made. Maybe he should have been waiting on these tariffs. Should have said, "Okay, we'll start with the Doge, government cuts, and let's wait till Congress gets into these tax cuts and some of the deregulation, and then I'll go ahead with the tariffs instead of just kind of throwing everything at first." Now, I understand he probably figures he has a window into the fall of next year, when the midterms occur, and maybe the Republicans will lose the House, although the Democrats are very unpopular as well right now. But on the other hand, too, I don't think waiting till the summer on tariffs would have been the end of the world as well. So but that's beside the point. So another thing I quickly wanted to talk here to you about today is I talked about Newsmax. Now, I don't know what's going on. I know that I got an email from them saying that my money that I sent it on Thursday for this. And just so you know, I did about $38,000 in it. I was going to do a little more, but it was at set $10 a share. I thought it was going to be closer to seven a few weeks ago. So I did a little less. I did a little less. And part of the reason I did a little less too is, obviously the volatility in the markets. But I think Newsmax has a life of its own because it has a big following, big base. They have now 25,000 subscribers, 25,000 shareholders, and they sold out the 75 million in like a week. Now, the reason I don't quite know what's going on, you can see this here where you can say invest now. This is still open on my browser on my computer, but on my phone it says it's closed. So I'm going to write them today and see what's going on. But I think it's basically going to be closed. And I think it's very impressive that 75 million of the IPO where you did not need to be credited, they basically were, sold out on it. So it's going to have about a $1.2 billion market cap. So I think that Newsmax still, even with this, again, decline in the markets, I'm just going to quickly look at Newsmax. You see Rumble's kind of had this big whack lower, 50%. And this is kind of what I consider to be a quote unquote Trump trade because it's a right wing streaming service, et cetera, et cetera. But Rumble's nowhere near the quality of a company of Newsmax. And Rumble's market cap, I think, is about $2.5 billion at these levels. Well, they have 80 million in sales and they lose 130 million. Newsmax has near 200 million in sales and makes money. So that, and I think they'll still get a little premium. And I think, again, having that big shareholder base, having the 25,000 shareholders and having like the viewers, the millions of viewers that watch Newsmax, those people, like this real small people that didn't want to do an IPO, they'll become shareholders. And I think that, again, for at least the first little bit, Newsmax can have a life of its own. So I just wanted to talk about it. I guess if you could try to do it if you're still interested at the $10. Like I said, I put my money where my mouth is. I did quite a bit. I'm not getting any fees or anything. So anyhow, that's basically it. So I was really happy because I was really worried about the markets affecting it, and it doesn't seem to affect it. So we'll quickly look at one more aspect here of the market. And you can see this is the Nasdaq's actually down a bit today. And again, you can look at that RSI and you'll see, yeah, even though it touched 30 here and here, we're actually lower than any time, I think, since like 2022. We're going to get a 5-year chart. And yeah, you can see this early 2022. That's the lowest we've been. It's even lower than the lower here. But again, notice when we hit this, it doesn't mean that has to be the bottom, but you can see when once it got oversold there was a slightly lower low, then there was a rally, right? And then, so at least we're going to get a rally. And I think at the least we can get a rally back to that 150-day moving average, which would be about like 4 or 5% from here. Then we'll have to see it at that time. Because I do think the economy now will be hit a recession. The question is, do we see a recession like we saw in 2022, where we saw a couple quarters of negative growth, but we didn't really see job losses or a serious decline? It was almost just like a headline recession. So will that happen, or will we start to see job losses? Obviously, we're seeing job losses in the government sector, and et cetera. And actually, another interesting oversold market is go look at the our oversold indicators. Look at the MACD. The MACD again as oversold as it was here and here in 2022. And here, that's 2020. That's coming out of COVID. And of course, that was the low here. So again, these are very positive for short term. I don't know if like or intermediate term, like the next month or two. That's another reason I kind of like what Newsmax is doing here, because they'll trade in about 2 weeks' time. And I think we'll start to get a bounce here at some point in the markets in 2 to 3 weeks at time. So, et cetera. So I guess I just going to leave it at that. Yeah. So profit from pessimism is going to really start getting going now. We're going to get it. I think this week I'll have the member site updated. So all of you who are the lifetime members, I will give you the passcode for that, and you'll see it. Oh, sorry. I love football. So here it is here, and you can see this is store YouTube. The members will be up here too. This has got the book you can pre-order. The book, by the way, got pushed back to April 22nd. I think partly because Newsmax is doing that IPO about the time the book was going to come out. And look, this book is like 5-6 years in the making. So getting pushed back another 3 weeks is not a big deal. We still have the April 1st up here. And let's just see it, the pre-order. Here it is here. You'll see what it actually say, April 22nd. Okay. So there you go. Yeah, there we go. And I don't really have much else to say right now. So we'll see what happens in the markets here going forward. We did have a big rally Friday. I still think we're going to have a lot of volatility. And I actually think that the retaliatory tariffs come in April 2nd, maybe the market actually could start to rally for a little bit, because Trump changing his mind more often than a lot of us change, our underwear or socks. I don't wear socks in the Bahamas, but I think that's actually more negative than just doing tariffs. So everybody take care. And yeah, there we go.